Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 30th of March. Starting off with the FTSE, and here we're in this triangle formation. Uptrend line there from earlier in the month, that's around the 8,600 level, and we need to break through basically 8,700 to get us, give us a chance of moving up to the top of that channel there towards 89.70. Looking for that by the end of next month if we manage to hold recent support around 8,600. Worst case is that we have to test the floor of the recent range towards 84.60. RSI at just under 50, not really telling us much, but the 50 and 200 day lines are both rising sharply, and so therefore the benefit of the doubt goes with the recent uptrend or the recent price channel that we've had since the end of 2023, but maybe that's being a little bit optimistic. Moving along to the DAX, and here we gapped out of that rising trend channel from back in November. I suppose we have to guess now where the floor of that channel would be. Maybe it's at the 50-day moving average and recent support around 22,200. That would be the nice scenario. Otherwise, we are looking at maybe a deeper dive towards the first gap from last month, 21,600. RSI now well below neutral 50, so on guard or on alert for a further breakdown after what looks like a multiple top there towards 23,500. If we do manage to get out of this, then the top of that channel there heading towards 24,300 is the prize for as soon as next month. But given the way that we have broken down below RSI 50, not looking great, especially after that gap down that we had during the week. Onto the Dow, which has got its own problems at the moment. Here we bounced off the floor of that rising trend channel during Friday's session, 41,500. Managed to bounce quite strongly off it, which may be a good sign. It's a gap close sell signal as well, so if we do break down below 41,500, we've got the chance of testing that November support line projection at 40,500. I think I warned that the RSI 50 failure earlier in the week was a potential leading indicator on the downside. So we are in a rather fraught situation at the moment, but the key here is holding the floor of that channel. Moving on to Bitcoin, where we're still mesmerized by the person who's taken a $300 million bet against this market. They sold at 84,000 and we're looking for 69 and then 58 to get out of that position. Although we did actually push through towards the 90,000 level, we've gapped down below the 200-day line, which is normally a negative signal, and therefore looking for this market to head maybe back towards March to November resistance here in the 73,000 area, even if we don't go as low as our rather rich friend wants. As far as the RSI trace is concerned, we effectively had a double and triple failure at neutral 50, so that is favouring the bears at the moment, as is the gap down. Star of the show by quite some margin is gold, where we were looking for 3,200 by the end of next month. The way things are going, we might even squeeze it or squeeze near it by the first week of next month. The recent resistance pushed through there around 3070, and above that looking for 3,200 pretty quickly, and perhaps even more. And that trend channel does look rather thin. You can see that actually a target towards 3,400 maybe in the next couple of months is very much possible, while we remain on the right side of 3,000, the floor of that channel. Moving on to the stocks and a few esoteric ones, ones that even I haven't heard of. First one is Crism, where you can see that the chart doesn't look great at first glance, but if I try and get the right scale, you will see that we are in a broadening triangle here for Crism, and the other positive aspect at the moment is that we've gapped higher off the lows on Thursday. Top of that triangle up to 16 pence, which we're looking for by the end of next month, especially while we remain above that 50-day moving average around 7.75 pence. If that works, it will be quite impressive. Moving on to EnQuest rather, and here gapping through resistance and then following through, which is normally a very strong sign. We've also got the 50 and 200-day lines rising. We've also effectively had two bounces at and above the neutral 50 level, which means we can look towards the top of that broadening triangle there at 25 pence by the end of next month, especially while we're above recent resistance around the 13 to 14 pence level. So another oiler which seems to be doing rather well at the moment for strange reasons. Integrated Diagnostic Holdings is next, and here we've had a bear trap island reversal, so gapping down there at the beginning of the month and gapping up, one of our favorite signals, and also managing to get through the 50 and 200-day lines at the first time of asking. At least while we're above that 200-day line and having broken post-February resistance, we're looking for 52 pence, effectively retesting the October resistance for this market. Moving along to the situation at Katoro, which I've looked at quite a few times, not quite sure I'm so keen on it, but here you can see we've got a broadening triangle base. We've gapped through the 50-day line, which is now rising, and we had a gap down there back in the beginning of the month, so it's a bear trap island reversal again. Bullish divergence going into that lower low there at 0.03, so everything pointing to a recovery here. The top of the triangle there at 0.08, and we're looking for that by the end of next month. Rocky ride with naked wine, and here the market liked the new strategy that the company's threatening to come up with. We've broken through the old February 2024 resistance there at 76 pence, and presumably while there's no end-of-day close back below Friday's low at 82 pence, we can look for greater highs. The initial target here was 87 pence, and above that we're looking for as high as £1.40. Maybe by the end of May. Let's give the shares a bit of time, but it looks as though the way they're going, they might not need that amount of time, and it would be quite a turnaround. The giveaway on the turnaround, though, the bear trap rebound for the shares below the January resistance, a marginal one by a couple of pence, and then the clear candles there ever since the 19th of March, so looking very strong indeed. Onto a stock which I don't think I've ever charted, and here personal group looking quite perky at the moment. We've got the top of a rising trend channel there heading for £2.63, which hopefully will be done in a few days. Again, we've gapped through previous resistance there at £2.33, and certainly while we're above that, looking for not only the top of the rising trend channel there too, towards £2.65, but also a fresh leg higher as high as £3.30 by the end of next month, or maybe going into May. But nice bounce off the RSI 50 level. Had to start with a couple of bounces off the RSI 50 level ahead of the gap higher that we had. So looking very strong indeed. Another oiler which is looking good at the moment is Rockhopper, and here we've got that rising trend channel in place since October. Top of the channel there, which I've slightly widened and adjusted, is up to 60 pence. And we're looking for that certainly while we're above the February resistance at 44 pence. And even if you have to give back to the 40 pence level, this is looking good, especially with the double bounce for the RSI. Once again off neutral 50. So a lot of similar patterns coming in here and similar signals in the bulletin board heroes today. Moving on to SRT, which has jumped after the bear trap and one touch of the 200-day line. That's another famous setup. Here you can see the top of the channel, the initial channel there, 70 pence, which we're looking for in coming days. Best case would be up to as high as 90 pence by the end of next month, which looks a bit ambitious, but with the bounce off RSI 50, extended bounce, and the sharp rise that we've seen in the last couple of sessions, maybe the shares can manage that. But we want to stay above that 50-day line at 51 pence, whatever happens. Very pleased to see that Strategic Minerals is pushing on up after being in a range between 0.15 and 0.3 for what seemed like an eternity. We've achieved our first target there at 0.41. Second target here, the upper parallel of that rising trend channel up to 0.63, which we're looking for by the end of next month. More oil and gas with Tullow, which seemed to respond modestly to the tripling of profits and the $300 million sale of one of its assets in Gabon. Here we just need to have an end-of-day close properly above recent resistance around 17.5 pence. If we can do that, we should be on our way towards the top of that broadening triangle at 30 pence as soon as the end of next month. That 17 pence area also the initial February support, so that is quite important. On to the last two. The first one is Trellus, which has given people a rather roller coaster ride over the last, over the course of this year. You can see that we had that massive spike there in January and have come back from that. We've sort of given away 2/3 or more of that gain. But there is a triangle in place now from the end of January for the channel there at 1.5 pence, top of the channel, or the triangle there at towards 3.5 pence. Looking at that, if all goes well, by the end of next month, see the RSI there back above neutral 50 at 54 as well. Stock which seems to be flying at the moment, even though the fundamentals are slightly questionable given the losses, but broadening triangle target there hit at 92 pence, and the longer we stay above that, the greater the chance of move to £1.30 by the end of next month. If you're fussy, wait for an end of day close above the 200-day line, just shy of 97 pence. But good bullish divergence going into this recovery, and also it's a bear trap island reversal, so gapping down there earlier this month and then gapping up on Thursday. That's it for me today. More updates tomorrow.